Shaun Haney and Justin Funk here from RealAgristudies. Looking forward to breaking down the August survey, which was all dedicated to farmers' perceptions and attitudes and behaviors around the idea that interest rates are rising and what is some of the impact that inflation's been having on your farm business. So I appreciate everybody as a respondent completing the survey. Really appreciate your participation. And Justin, let's dig into the results and find out what farmers said.
Yeah, you bet. So this is an interesting study because we did essentially the same survey in April of 2022. Of course, at the time, inflation was becoming a hot topic. Interest rates were starting to rise, and we wanted to get a sense as to how farmers were being impacted by these interest rate increases and inflation. But you fast forward now a year and a bit later, we're still in sort of the same spot. We see interest rates continuing to rise, inflation's showing some signs of easing up. We wanted to see how farmers' attitudes, perceptions, and behaviors on the issue had changed. So we approached our insights panel starting on August 31st. So, we can call this an August study because we just touched the tip of August there. But we kept it open till about September 8th to accommodate the Labor Day holiday. And all in total, we had 518 farmers from across the country participate, which gives us a relatively high degree of accuracy and confidence in the results. So that's just a little bit of background on how we approach this. Now, the first thing that I'm going to share with you, Shaun, here, this is the first question that we ask respondents, and that was to identify the degree to which they were concerned about inflation. So extremely concerned, somewhat concerned, may or may not be concerned. And, here is the results from 2022 compared to now 2023. So you can see in the lighter blue, what we see here is that the level of concern has eased off a little bit, but there still remains a relatively high degree of concern. I mean, so when you put those numbers together, you're looking at almost 95% of farmers indicate somewhat or extremely concerned about inflation. So the concern is still there.
Yeah, the unconcerned amount is extremely low in relatively in comparison to the farmers that are concerned.
Yeah, absolutely. So, I think we agree there's concern out there, which, I think makes these results even more interesting because as we start digging into this, we're looking at not just opinions about inflation, but the impact that inflation is having on the farm. So we then presented the respondents with three different attitude statements, trying to gauge their perspectives on the issue of inflation. And so the attitude statements were this: Canadian policymakers' response to inflation has been very effective. So rate the degree to which you agree to that statement. And you can see on the right-hand side, we use a scale that essentially translates to 1 to 5, where 5 is completely agree and 1 is completely disagree. That, by the way, allows us to calculate some means, which is really interesting when you start digging into analysis and looking at comparative means, let's say in this case over time. The second statement, Canadian government policy has contributed to inflation. And then finally, interest rate increases are necessary to reduce inflation. So here, I'm going to walk through each one of these one by one. So the first one, Canadian policymakers' response to inflation has been effective. We take a very, bold statement and we try to get people to agree or disagree to it. And in this case, you can see 67% disagree with that statement. So I think that there's a general malaise over policymakers' response in this particular instance.
And in reality, though, yeah, I don't like interest rates going up either. It's adding to the cost, and say, like, my personal line of credit. It's also, there's been a lot of talk in Canada about housing inflation and rising food costs and things like this. The reality is, though, the Bank of Canada doesn't have a lot of tools in the toolbox when it comes to combating inflation. So raising the key lending rate is one of the key strategies that central banks, not only in Canada but around the world, have been using. So it's one thing to say you disagree. I guess the other side of it is, though, what other choices do they have?
Yeah, what are the alternatives? This statement here, you can see it's almost flipped around. Canadian government policy has contributed to inflation. Here you see 86% agreement to that particular statement right there.
Yep, this all has to do with government spending. And a lot of the support payments that came out of the pandemic, or due to the pandemic, I should say. And basically, when consumers have more money in their pockets, they tend to go spend it and not save it. It's human nature. It's kind of where we are in today's world, and a lot of people believing that those government payments are what has contributed to these rising costs because of that artificial demand.
Now, this chart looks a lot different. Interest rate increases are necessary to reduce inflation. And here, when you really eyeball this one, the majority agree, but it's not a convincing response. It's not like, 86% agreement in some of those other slides we see. This one, there are varying opinions on this. And so, I think that overall, people agree, but there is a group here that is somewhat undecided or completely disagrees to this statement here.
So Justin, as we look at these slides, then we had a large number that disagreed with policymakers' decision on how they were dealing with inflation. Now, you could take policymaker as Bank of Canada, or I guess you could also take it as the government. On this slide, even though they disagree with the strategy, there's a realization here, not a convincing realization, but a bit of a realization that, okay, I don't agree with it, but interest rate increases are necessary to reduce inflation. Is that how you would describe it?
It is, and it would be interesting, and we do have the ability to do this to cross tabulate. How does somebody answer one question versus another to see if there's a theme that's unfolding there. But in looking at comparatives, these are the same questions that we asked back in April of 2022. And so what I'm showing you here, these are the means that I spoke of earlier. So the bigger the bar, the more agreement to the statement. And so in 2022, you can see the means here of 1.84. So that's disagreement to the policymaker's response has been effective. 4.44, that's strong agreement to policies contributed to inflation. And then agreement, but not quite as much agreement to interest rates are necessary. When you look at how the means shaped up in 2023, a couple of observations. First of all, now this is very marginal, but it's interesting to see how this is played out. There's a little more agreement now after some time has gone by, just a little, but still general disagreement. Keep that in mind. So really, I don't put a whole lot of faith in this. But then on the other side, interest rates are necessary. The numbers tick down a little bit. And I just wonder, now that people have observed, okay, so we've seen the rates going up, but have we seen inflation going down to the same degree? It's marginal. I don't want to get too hung up on the size of the decrease here, but it's interesting to see that it has decreased a little.
And what hasn't changed is the fact that Canadian farmers and ranchers believe that Canadian government policy has contributed to inflation. That has not swayed whatsoever. And it'd be interesting to see what the general population of Canada thinks. We've seen a real reversal in the polls since April of 22 as it applies to the approval rating for the Liberals. This is one of the items that has, affordability is one of the items that has really twisted those polls in a different direction than the Liberals would like to see.
Mm-hmm. So these are people's general attitudes towards inflation. Now, what we take a look at are the impacts of inflation. And so here we look essentially at how is inflation or interest rates affecting spending on the farm, pursuing other planned growth activities or making capital investments, or in some cases, even the transition or succession plan. So again, these are attitude statements, and we look at them on the agreement scale of 1 to 5. I'm going to walk through these different ones so you can kind of see how farmers feel about these issues. So the first one is this: my business has significantly adjusted its spending in 2023 in response to inflation. You can see the 65%-ish agree to this particular statement. So, I look at that and think that, that's a pretty significant number right there. And so there's got to be, further impacts that stem throughout the industry on this one.
Yeah, that's something that suppliers are not going to want to see. And of course, there's things you can't cut out. But in any business, this is where you kind of break down the needs versus wants. In belt tightening times, for sure. I'm not surprised by this slide at all. A lot of farmers very fiscally conservative, so this would make a lot of sense on this result.
Yeah. Interest rates have prevented me from pursuing otherwise planned growth. This one is, I don't know. I think this one is maybe concerning, maybe not. I don't know how to interpret this one, but 59% agree to this statement right here.
Uh, so you think it's concerning because it's so high?
Yeah, I mean, so you build a business, you have a strategy, you want to grow, and there's a lot of other implications to that. Uh, Now we have to throttle back on those growth plans. It seems like that could have a trickle down effect on the farm. I don't know. I mean, anytime your plans are interrupted, it affects more than just you. There's other people that are going to be impacted by that.
Right. So let's just take out farm growth and let's put in, you know, household spending or something like that. Okay. This is exactly what the Bank of Canada is trying to achieve. They're trying to, put a governor on people's spending, so with higher rates, people are less willing to take on debt. And so I'm not, it maybe is concerning, but I think it's very predictable that this is how people would feel. This is, people seeing, rates much higher than they were, say, 5 years ago. The reality is, in the broad context, if you look at a 30-year chart on interest rates, we're really, if not, we're kind of a blip. We really have not gone anywhere, especially if you include the 1980s in that chart. But people are seeing the higher cost of borrowing, and it's creating it's putting that governor on that spending, and maybe Sarah say taking a bit of a. We've also got farm profitability in certain areas of the country. We still have parts of the Western Prairies dealing with droughts. We've got profitability down in certain areas, and interest rates going higher. I think this is a result that would be expected.
Yeah. Okay. Well, so the next slide looks more at sort of the shorter term purchases, making capital investments. So here we use the example of upgrading equipment. And in this case, we see 63% agree that the interest rates have had an impact on preventing those investments from being made.
Yeah, and the overall price of them. So that's a factor too. So, and profitability wrapped into this, but clearly there's a focus on the borrowing cost being one of those drivers of people pulling back on some of the spending. We'll see if that showcases itself. And when we see some of the results that come out of the Association of Equipment Manufacturers in their flash reports that come out monthly, and see if what farmers are saying is actually what they do.
This last one, I'm not totally sure how to interpret this one, if this is something to be concerned about or not. But interest rates have had a negative impact on our farm succession or transition plan. 44% agree. Now, you remember going back a few months, we did a survey on farm transition, and we identified obstacles to transition, and the financial cost was one of those things. And so this kind of compounds that particular issue right there. Now, I will say, before we comment on this, not everybody has a transition or succession plan or is going through this right now. So I do think that these numbers are somewhat skewed, but the fact that 44% agree that interest rates have a negative impact on that transition plan is notable.
This is one where I would love, as a respondent, you're watching this. This is where I would love to understand more on the why this is the case. So there's ideas that come to mind, which is, the younger generation has to borrow money to buy. That makes sense on how you would agree. If you're concerned that rates are going to go substantially higher, and you're worried about overall farm profitability, and you're having, flashbacks to, decades previous where, high interest rates took out a lot of farmers. That may change your desire to pass it on to the next generation or maybe to participate as the younger generation. That seems a little far-fetched to me. I think it's more of like I need to borrow a bunch of money, millions of dollars, to buy out mom and dad, or to take on that debt. That's the,
Mhm.
but if there's other things that respondents, you're like, oh no, it's because of this. Please send us an email, shaney@realagriculture.com. Want to understand this one a little bit better.
It would be interesting to cross tabulate these answers with the interruption to farm growth too, because if growing is part of the transition plan,
Yeah.
there could be some relationships there.
And in many cases, that is those things are very, very connected. Justin, I have a good friend that I was talking to just last week who said, we got to increase the size of this farm by about 25% because there's a daughter that's now coming back that wasn't planning to come back, and in order for it to support two families, it's going to have to we're going to have to get bigger, right? So you might be really onto something there.
So the next thing we looked at was now more from a behavioral standpoint. How are people approaching borrowing and lending? So here we looked at the type of current loans and interest rates people have and whether they have changed those over the year. Intentions to purchase land in 23 and 24, and preference for their type of mortgages for these future land purchases. Some interesting findings that come from this. First of all, here, have you moved mortgages or loans to fixed interest rates in the last year? This is 2023 results. You can see, no, we've had fixed rate loans for a while, is the largest bar there. Compared to 2022, you can see that the chart looks a little different. And I just want to kind of highlight these differences. First of all, no, our loans continue to be variable rate, going from 20 to 17% is within the margin of error. So we don't really look at that and say there's really no difference there. 21% to 19% within the margin of error. 19 to 18 definitely within the margin of error. But then you've got this one right here. And so, no, we've had fixed rate loans for a while. And I don't think this is worth having a huge conversation about, but just even based on the terminology, I'm wondering if, for a while, we've been going like that's a relative term, right? So you go back to April of 2022, you see that number growth. Is that simply just a result of time going by right there? So I not can't say for sure, but that's really the only one that is notable.
Yeah, and still a slight change, right? Like it's like you mentioned the margin of error. It's one of those things where, like, I did a mortgage in this time period of the rates going up, and I wasn't buying farmland, but it's hard because you're stuck in this sort of like mindset of like, okay, do I go short-term fixed because I think rates are going to go down, and then I'll switch into a variable, or do I go variable because I think rates are eventually going to really in the short term go down here, or do I go fixed longer term because I think rates are going to go much higher than now? So I understand how farmers would be very confused on what the best strategy is here, because if you just watch Bloomberg or CNBC or Fox Business, you get a widespread amount of varying opinions. So really, I look at this as not a lot, even though rates have gone higher since April of 22. Not a lot has changed here in terms of the makeup of the loan portfolios.
That's sort of my conclusion too, Shaun. Well, so interesting. You talk about how you took out a mortgage. If somebody's taking out a mortgage, we ask the question now. If well, first of all, have you bought or do you plan to buy land? Okay, so this is sort of like sets up the next set of questions. 17% said yes. 59% said no, and then there's a group that is undecided. So 17% said yes. I want you to remember that, because the next question is, if you were to take out a new mortgage, what type would you likely take out? And you can see here that for the most part, 85% would choose a fixed rate.
Well, and I'm in the majority. I'll disclose this. I did a 2 to 3 year fixed rate. So that's exactly what I did.
Yeah.
So
Now, the next one, I compared those who said they were going to buy land versus what type of mortgage they would take out. And this was the result. So remember that yes is only 17%, but still that's a significant number in our sample. 45% of them would take out a 5-year fixed rate. So you can see that bar looks a lot different than the rest. Now, what's interesting about this is that, no, fine, they're not buying land right now. So, when they're answering this question, it wouldn't be related to the purchase of new land. Okay. Undecided may or may not, but you might argue that they're undecided because of the cost of borrowing. But for those that said yes, you can pretty much tie the intention to the behavior, and here you can kind of see what that behavior is going to be like.
yeah. So does this also tell us that slide of 2 slides ago in terms of where we had the variable or the fix for a while, that is maybe maybe a bit of a lag there that looks to change if when we do this, say 12 months from now?
Yeah, it could be. Again, it'd be interesting to overlay the results of the type of mortgage you would take out versus the other types of loans that you have to see
Yeah.
if that translates to a change in action. So, yeah, it's interesting stuff for sure. I mean, this is very complex part of farming, isn't it? I mean, we do a lot of stuff on, production and stuff, but this farm business management, managing money, this certainly adds complexity to the whole thing.
Yeah, absolutely. Could you just go back real quick?
Yeah, yeah.
Yeah. So, and honestly, this is, these decisions, depending on the size of the farm, but money is relative to the size of your operation. Okay. But when we're talking about some of the values here, when we look at farm debt levels, the right or the wrong decision here in hindsight, just like when we're marketing our crop or our livestock, this can separate, the really good managers from the average managers, right? And hey, listen, good managers make wrong decisions too all the time. Let's be honest about that. What's also interesting here, Justin, is that whether you're buying land, you're not, or you're undecided, the variable rate is really the same. People are completely backing off from the idea of variable rates at this time. It's just what's fluctuating is 1 year fixed versus 2 to 3 versus 5 year.
Mm-hmm. Yeah. So that's the 2023 inflation impact study. Thank you to all our panelists who took the time to answer the survey. I think this was a pretty quick one. It only took approximately 3 minutes for people to answer these questions, but important answers nonetheless. So thank you for the effort, especially during, we're approaching here peak production time. So really happy to have these results to share back with you.
Yeah. Yeah, and results of a very dynamic situation. We saw last week the Bank of Canada held rates at 5%. They were hawkishly holding, as Kelvin Hepner from Real Agriculture described on Friday's Real Ag Radio show. If you read a lot of opinion columns since that decision by Tiff Macklem, the Bank of Canada, don't assume that they're going to hold at this point. There's been a hold and raise or pause and raise strategy that they've been engaged in. The Federal Reserve has as well. So we're not out of the woods yet here, even though we are. I think the concern, as we saw, there's the level of concern on inflation has dipped somewhat. People are still concerned about it, and they should be. So more to come on this topic indeed. So like Justin said, thanks so much, everybody, for completing the survey. If you have any feedback, we'd love to hear from you. You can go to RealAgristudies.com, or you can send us an email to shaney@RealAgriculture.com. Your feedback is always very, very welcome, and I love that two-way engagement. So until next time, cheers, everybody.